What trading types exist and which timeframes to focus on. Friends, let's discuss timeframes for trading. First, understand the trade types: scalping, intraday, swing, and long term. Scalping refers to executing a trade that you can close within a few minutes, allowing you to secure a quick profit, ranging from 4 to 5% or even 10%, swiftly. This strategy is known as scalping, and it involves timeframes of 1 minute, 3 minutes, and 5 minutes. On the other hand, intraday trading involves opening a trade that you can close within the same day, utilizing timeframes such as 15 minutes, 30 minutes, and 1 hour. Then trade. A swing trade means a trade that you hold for more than one day, meaning your trade will continue for more than one day. The timeframes you should consider are the 4-day and 1-day timeframes. A long-term trade means that your trade will last for weeks and months. The timeframes you should consider are the 1-day and weekly timeframes. I've also told you the trade types and the timeframes you should consider. From here, you can select the type of timeframe and then analyze. If you're looking at the 4-hour chart above, it means that opening a swing trade means it lasts over a day. So my friends, once again, I have explained to you how you should trade by using various types of frames.